Alright, let's get straight into this. We got no time to waste. Okay, how to read the market like a hedge fund. Stop guessing, start executing. Okay, so first things first, main point number one, who is really in control of the markets? Okay, so I wrote down go to the crime board. So I made a crime board and I'm gonna take you guys there and show you who is really in control of the markets. Okay, so the stock market. This is our main point, the stock market. Okay, what's our next main point? We're gonna start naming stuff that connects to the stock market. So let's name stuff like United States. That's the number one country in trading is the United States. Okay, so United States, stock market, the news, okay, economy. Okay, we got Fed, we got government, and now we can start connecting dots. So who is the main country? United States. Okay, who follows behind the United States? Who follows the United States? What other main countries are there traders in? So the second main country is United Kingdom. United Kingdom is the second main country. They have more traders in the United Kingdom than they have in the third, Switzerland. Switzerland, that's where the third biggest country that trades, okay? And then we have number four, China. China is another one. Right after China is Dubai and Singapore. And then, so these countries, all these countries, who do they follow? They follow the United States, okay? So in the United States, so we now know that United States is number one. United States is the main people, where the main guys who control the market mainly is by the United States, okay? So the stock market connects to the United States, okay? But now let's look at the other one. Let's look at the Fed. So I'm not gonna get into detail. You guys should do your own research in your own time. But the Fed, who connects to the Fed, okay? So we look at FBI, we look at government people, we look at FBI, we look at DNI, we look at Congress, we look at Supreme Court, we look at Congress, we already said that, Congress and Supreme Court, we look at the President, Donald Trump, we look at elite corporations like businesses, big businesses like BlackRock is one of the biggest, CIA, we're looking at NSA, we got the Fed of course. So we're looking at all these governments, okay? We look at what connects in the government. All these people make up one government, okay? There's so much more that make up the government. There's so much more, but again, I'm not gonna go into detail. You should do your own research on your own time. But if you look at the DNA, the FBI, the NSA, CIA, Donald Trump, Congress, Supreme Court, all these people, and I wrote down the main names as well. Like Mike Johnson, he is like the legislative branch leader at the moment. And then the back room, most powerful, the guy who's actually like really making the choices is Mitch McConnell. Okay, he's the Senate. Okay, and all these people, if you do your research, they all connect to each other. They all have their own group. They all have their own leaders. They're not all controlled by Donald Trump, okay? They all are kind of like their own little individual leaders, have their own little stuff. And everyone connects and helps each other. So in the stock market, all these people, they connect to the Federal Reserve. And they help the Federal Reserve. They control the Federal Reserve. It's like a firewall. They protect it, they support it, they're all together helping each other. It's like a firewall, okay? So who is in control of the Federal Reserve? It's Powell. Powell, he is the biggest voice. He says something, the stocks go up, stocks go down, okay? So, and we can find pictures of Donald Trump or of Biden shaking the hand of Powell. They're together. They partner, they're with each other, okay? And now we're looking at who does the Federal Reserve follow, okay? So we go deeper into research. and we find the biggest fund in the world right now is BlackRock. BlackRock is the biggest fund, and it's controlled by Larry Fink. Okay, so if you look into research, they hold like 10 trillion or 11 trillion dollars in the United States. Okay, so they control the United States money. They control most of the United States money. Okay, so if we look deep into research, deep into articles, how well and Larry Fink have shook hands. They have made some kind of deal. They're together. They're helping each other. BlackRock has people from Congress, has people from the government also working for them. We see retired employees from the government working for him, for BlackRock. So we know that the Federal Reserve, all these people act as a firewall for the Federal Reserve. The Federal Reserve and BlackRock are partners. They help each other. Okay, so mainly Federal Reserve follows BlackRock in the stock market. Okay, BlackRock controls most of Americans' money. They don't control American money only, but they control the government's money as well. Okay, so America's money bank is pretty much BlackRock. Okay. So now we look even deep. Now we look into the news. So we start looking at the main news companies: CNN, Fox, NBC, ABC, CBS. They have all one main investor, and that one main investor is BlackRock. BlackRock is invested into these companies and helps them out. They're partnered with BlackRock. That's the main leader. That's the main investor. BlackRock, Larry Fink. So Larry Fink pretty much controls all the main news as well. So that happens, and then economy. We look at economy. What happens? What controls the economy? Prices in the stock market. Okay, prices in the stock market. They control. What controls prices? Businesses follow prices. So if the price goes up, business goes up. If the price goes down, business goes down. Okay, if business goes down, jobs go down. Okay, if jobs go down, what happens? People don't get as much money. Money goes down. Okay, what happens if money goes down? People start becoming homeless. No more money. Okay, what happens when you're homeless? You can't feed yourself. Death. Okay, you die. So all this is leading up to one main point of who is really in control of the market, and that's BlackRock. BlackRock is the main leader. They're the main controllers. Okay, they control most of America's money. The government helps them. They're partnered together. BlackRock is pretty much the government now. Okay, so they control most of America's money. So the stock market is all based. Like the main leader of the stock market is BlackRock. They even control the news. Tell me how that makes sense. They control the news. They invest into the news. They pretty much, they're partnered with the news, and they're partnered with the government, and they're the main people in the stock market. So you're telling me if they can control the news, can't they just say something good, make the prices go up, or what's going on? Who's actually in control? Okay. So we'll get into that. So now we know the main leader of the stock market, the main people of the stock market is BlackRock. BlackRock, Larry Fink, that's the main leader of the stock market.
Alright, now that we figured out who's actually in control of BlackRock of the stock market, let's get deeper into it. Okay, let's get deeper into it. So we went to the crime board. Okay, so before we even get to this point right here, what we will talk about is who's actually in control. Is the system controlled? Okay, so I want to talk about how the system is a money laundering scheme. Okay, so these funds, how prices work, how prices move, what happens. So do you realize in the market the prices go up, down, up, down, up, down, up, down, and make a trend going up, and they go up. Sometimes they push up hard, sometimes they push down a little bit, and then push down up even harder. Or sometimes they push up hard and they push down even harder than they pushed up. Okay, so why does all this stuff happen? You might think, oh, it's because of news. Oh, it's because of this. oh, it's because people started selling. But the truth is, people do not control the market. Because if people did control the market would look like this. Boom, 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 boom. It would be super random. And there would be news that would come out, good news or bad news. Bad news, boom, market straight down, crash. Boom, good news, market straight up, great. And if it was controlled by people, the market would never move smoothly. It would never make trends. It would never make fair value gaps. There wouldn't be any of that. It would be a mess. No one would be in the market. No one would think it would control economy. No one would trust the stock market if it was actually controlled by people. Okay, so who actually controls the market? Okay, so if we look deeper into it, funds do. Funds control the market. They bring the market up, they bring the market down, up, down, down, slow uptrend, down again, a little bit harder, start making downtrend, up harder. They control it, they make it smooth, they help it run, okay? And everyone thinks the market is gambling. It's random. You don't know where it's gonna go, but the truth is you can know where it's gonna go, because do these funds trade themselves? And this is approaching this question: do the funds trade themselves or have an AI system, an algorithm? Okay, so we start looking into the truth. Okay, so before we even get into that, I still want to highlight the point that people do not control the market. Everyone thinks people control the market, but people do not control the market. Funds control the market. It's a money laundering scheme. So listen, they go up and people buy. And then what happens when people buy? They sell to them. They sell, bring the price down lower. So now the people that bought it for expensive, now they have to sell it for cheap. So because price went down, so now they sell because they're like, oh shoot, we lost, we were wrong. Sell now. They sell for cheap, they bought for expensive. Opposite with funds, opposite with smart money, with big whales. They buy when it's cheap and they sell when it's expensive. But how does price get to that point? They control it, they push to that point. So say you buy 10,000 contracts. You buy 10,000 contracts. What's going to happen to price? Price is going to try to find those sell contracts to sell to. So they when you press and you press I'll sell it here, if price gets to this point, they make stop lines themselves so they can buy and they can sell. Do your own research first of all before you say, oh no, they can't. No, they can. They control the market. They are the market. They are the market. Do your research. Go and research. Look at this stuff. I'm not going to go into detail. I'm not going to go into research. So you have to, on your own time, go into research and find out all this stuff yourself. But first, so they push the price up, and they push the price 10,000 contracts buy, and they're trying to find those sell contracts. So they say we want price to go this high, so they put sell contracts there. So the price only gets up to that point, and then it goes down again. Okay, so they start selling because it went expensive. People bought when it went all the way up because of fear of missing out, and people bought when it was expensive, and now they sell all their stuff to them, and they sell for expensive and buy for cheap. So it's a money laundering scheme. The whole time people are buying when it's expensive, they sell to them. They buy when it's cheap. Price goes up. They sell when it's expensive, and that's how it works. It's a money laundering scheme. And sorry, the camera cut out because I don't know, it just cut out for some reason. But anyways, so listen. So, and again, when price goes down, people start selling. They start selling, and then so that pushes the price down even cheaper, and then they buy. And when they buy, they don't buy small. They buy enough contracts to push price up higher. They buy enough, okay, to launder your money, okay. And why can't they just consolidate and do that the whole day? Because if they did that the whole day, then everyone would think the market was actually not controlled by people, by someone. People would start thinking that's control. And that's why they don't want you to know this stuff. They don't want you to know that it's actually not controlled by people. It's actually not random. It's actually an algorithm. It's actually a system that they built And people don't control the market. They do. So they have to make random moves. So, well, not random moves. You could actually predict them once you start learning the system, once you start learning the algorithm. But that's why they push the price up, and that's why they push the price down, up, down, and make it random. They make it random every day, but it's very similar to what they have been doing. It's a system. It's an algorithm. You can memorize the system. You can memorize the algorithm. You can learn. Okay. So that's like a really big main thing is people don't control the market. Funds do. Funds control the market. Okay. So now that we got that out of your head that people don't control the market, it's actually a money laundering scheme, and it's all controlled by the fund. The price goes up because the fund bought, and the price goes down because the fund sold. It's only controlled by the fund, by their system, by their algorithms. Okay. So now we get into the question: do these funds trade themselves, or have an AI system or an algorithm? So, one really important main thing is they have AI system. So why do they hire employees? Why do they hire people from Harvard? They hire people from Harvard, coders. They hire smart people to code computers, guide computers, update the computers every single day, because an AI system, it cannot learn the market every single day. You have to update it every single day. You have to control it every single day. You need a lot of maintenance, so you need a lot of workers. You need a lot of really smart people that are really good with this stuff. That's why they only hire people from Harvard or for family members as well. It's because there's secrets in the fund. When you exit the fund, you can't talk about this stuff. You can't tell people about this stuff. You can't, because they'll come after you. They'll take you down. Okay. So why am I talking about it? It's because they won't do crap. Because I'm an 18-year-old kid. Who's gonna listen to an 18-year-old kid? Nobody. So they wouldn't even care if I'm talking about this because I have no influence, especially with 0 subscribers. So it doesn't matter. But so this stuff is valuable information. And if you're gonna take this and shove it up your butt, then shove it up your butt, dude. I don't care. Sit on it. But if you're gonna take it and actually use it, then you'll grow in the stock market. All right. So listen. So do they have an AI system, and or do they trade themselves? Back to the main question. Okay, so the main question: no, they don't trade themselves. They invest a good bit of money, make the market go up, and then they have a system where they say, okay, in the next year I want the market to go up. But while it's going up, push down, push up, make it look random, but slowly and surely make it go up. Okay. So they build systems, they build AI systems, and these AI systems, they have to follow rules. Okay. So we're about to get into that. This is the next point. They have to follow rules. But before we get into that, another thing that's really, really big is, if you see an Apple stock, that is not Apple that listed themselves on that stock market. What happened is the big fund BlackRock say they bought like 20-30% of Apple, okay? And they're not selling you Apple contracts, because then you'd have to sign papers because you're now an owner, okay? So that makes no sense. Why can't you just buy it online and then not get no papers signing saying that you're 1%, you own 1% of Apple? Because you don't own 1% of Apple. The stock market is, they're not selling Apple contracts. I mean, they're not selling Apple's not selling it. Apple's not listed on the stock market. What's listed on the stock market is what BlackRock bought of Apple. So what's listed off Apple. So let's go back to it because the camera cut out again. But anyways, so listen. So what's listed on the stock market is what BlackRock bought from Apple. So say they bought 30% of Apple, and they bought one contract, one share for $10. Okay, so they bought one share for $10. This is just an example. So now what they're going to do is they're going to sell you shares. They're going to sell you contracts for more expensive. So they bought a share for $10. Okay, I'll sell you one share for $15. Okay, so now they start selling you shares for $15 and say that's a normal price. Say that you're actually buying Apple shares, but you're not. You're just buying their shares that they bought for Apple. So they're the actual owners. You're never going to own a piece of Apple. Never. It's not going to be possible. Because if you actually did, you would get papers in the mail. You'd have to sign something. It's logic. You'd have to sign something just saying that you're 0.1% owner of Apple. No, you are not an owner of Apple. You are owner of BlackRock's shares of Apple's. So BlackRock listed Apple, said it was Apple, and so you'll never even know if they actually bought shares of Apple. You never even know. What if they just say, because they can. They're in control. They can do whatever they want. So you never even know if they're actually bought shares of Apple. Okay? No one actually does that research. No one actually cares. People just want money, so they could care less. So that's a really big explanation. That's not Apple being listed. That's actually just BlackRock listing as Apple what they say if they did, what the shares they actually bought, and you're buying their shares that they bought from Apple. Okay, so they're the actual owners, but they get more money through you buying shares. But it's not. It's a whole. You can see it. Okay, if you have logic, if you have a brain, you can see it. Okay, I don't have to explain more. You know. Okay, if you have a brain, then you should know. Okay. So again, let's go resume. Let's go back to the point. Every AI is programmed to follow these rules. What are they? Okay, so they're AIs. They have to be programmed to follow certain rules. It's an AI. It's a system. They have to program it to follow rules. They have to. Okay. So what are the rules? So you have to do your own research on your own time. Again, research yourself. If you don't believe me, research yourself. Okay. One rule they have to follow is fair value gaps. Okay. So what are fair value gaps? I already explained it in my video I posted earlier today, so you should go watch that if you haven't watched it yet. But what fair value gaps are, or imbalances, they're sell orders, okay? So how do they work? So say price moves up, okay, it's bullish and it makes an imbalance because it moved up too fast. They have a lack of sell orders in that space. So what they do is they come back to that space to fill their sell orders and then continue going up. So let's look at one with examples. Today wasn't a good example for that. Let's look for a different example. So listen. Here is an example. Nope. Fudge, dude. Come on. Okay, this is an okay example, whatever. So, if you do not know how to mark a fair value gap, I recommend you watch a video how to mark a fair value gap and how to identify a fair value gap, okay? So right now, we see they made a fair value gap right here, and there was a wick inside of it, okay? So first of all, they started going up from here. That's the low, and they kept going up, okay? So to go up higher, when they pushed up, there was a lack of sell orders, so there was not enough people selling here, so they couldn't push up as high as they wanted, so they needed to come back to get more sell orders to keep pushing higher. So they came back here and pushed higher. But now, if they never made fair value gaps, then guess what? They would have to push back down to the low to get more sell orders, and then the same thing would happen. They would only be able to push here because that's the most liquidity they can get, okay? Or maybe they would push just a little bit higher, but they would never be able to get too much higher. They would never be able to push higher or as high, but they would never be able to push higher or as high as they want to if they didn't make fair value gaps. So fair value gap is to help themselves out, okay? They need to push higher. It's like a refuel spot, okay? It's you run out of gas and you refuel. You have a tank with you because you don't want to go to the gas station, and you keep going farther. Because if you go to the gas station, that's taking a back step, you know? That's a bad example. It's a bad example. Whatever. Anyways, I don't care. Whatever. You get the point. If you don't get the point, then I don't know, something's wrong with you. But yeah, so they make imbalances to come back to and then keep continuing going up, okay? Because if they had to go down every single time, all the way back down, they would never move. It would always consolidate. So that's a really main thing. is fair value gaps, okay? So that's how they work, that's what it is. Okay, now what's liquidity? Liquidity, they have to follow liquidity. They need liquidity to move the price. Okay, so what is liquidity? Liquidity is sell orders or buy orders. Okay, so say price comes down here. So hold up. You see this? You see how pricing consolidating? It's not moving. It's staying the same. There's a support and a resistance zone. Okay, and price here is consolidating. It's needs liquidity and needs sell orders so they can buy into them and push price higher, or the opposite, they need buy orders to sell into and push down lower. So that's what liquidity is. It's orders. Okay, so if there's liquidity to the upside, that's buy orders. People are buying, so then they'll probably want to sell to those people and sell push down harder. So that's what liquidity is. So when we say liquidity, that means where price, what orders are getting ordered there. Okay, so let's look at this example. So this is a liquidity sweep. What is a liquidity sweep? Is when they need more. So in this case, they want to push down price down harder, so they need more sell orders. Okay. So because they need more sell orders, so what they did, sometimes what they do is they do bring price back to a restart zone. So right here, people have their stop losses here. Why they come up here is because people have stop losses here. People say, okay, if price comes here, I'm selling, I'm stopping out. People who went short and they're looking to sell, and they're like, okay, so if price comes up here, I'm wrong, so I'm selling here. So everyone places their stop losses right after a low. Why? Because everyone says to, but you shouldn't. You should put it a little bit higher. But anyways, so people put stop losses here, so that's why they came back down here, back up there. They swept liquidity. They got people to sell. They got people to buy here, or to buy, and then they sold to all those people and pushed price down hard. Okay, so that's what liquidity is. And what a liquidity pool is consolidation. So right here you can see price right here in this box is consolidating. Okay, what is consolidation? Is they're trying to shake out traders who are holding a trade. So they're moving price like this it messes with your mind. When you're in this in real time and you see this, and the 1 minute time frame, it goes up, down, up, down, up, down, and you see this for the last, how long this lasted like an hour. Yeah, this lasted an hour. This consolidation. So when you see this happen, it messes with your mind. You're like, oh shoot, price is going back up, I need to sell. Okay, shoot, price is going back down, I need to buy. Or I need to sell when price is going down. Oh shoot, price is going up, I need to buy. So it messes with your mind. So that's what liquidity pool is. It's trying to shake you. It's trying to mess with your mind. It's trying to take you out of a trade. Okay. So that's what liquidity is. Okay. Now discount and premium. What is a discount and premium price? Okay. Discount and premium price is the past days, like a big move that happened. You base a premium on discount price on a big move that happened. Okay. Usually 20 points or more of a move. Sorry, I dropped my pen. But anyways, so back to what we were saying is you base a premium and a discount zone off a big move that happened usually. So if you don't know how to identify a discount and premium price, I say you do your research, watch a YouTube video, learn how to identify it, okay? So that's where price is at its high. So dang, hold up. Dang, bro. Price went down hard, bro. Dang. Okay, anyways. So that's where price is at its highest point. So when price is super high, that means price is super expensive. So what happens when price is expensive? Logic, use your logic. We want to sell it. Okay, we want money. We're all greedy. So when price is expensive, we want to sell it. because it's expensive. It costs a lot. Okay. So, and same thing with the discount. When price is super low and it's cheap, what do we want to do when price is cheap? We want to buy it. When something is cheap in the store, we want to buy it because it's cheap. It costs nothing, you know. So that's what discount and premium price is when the price is expensive and when price is cheap. Discount is when price is cheap, and then premium is when price is very expensive. And smart money does the same thing. These funds, they do the same thing. They sell when it's expensive and they buy when it's cheap. So that's what premium price is. Why does it work? Because again, funds, they want to buy when it's they want to buy when it's cheap, and they want to sell when it's expensive. Okay. So if you base your premium, so this is a premium right here. Look at this. There's other indicators that you get to put in, like fair value gaps and stuff like that. But because price was at its expensive zone, it hasn't gone this high for the past few days. It was very expensive, and they sold because it was expensive. And now they're going down to a low, and they're probably going to want to buy soon because it's cheap now. Okay, so now let's talk about time zones. What are they, and why do they exist? Okay, so what are time zones? So in each time zone, there's different things that happen. But time zones are sessions. So like London session, Tokyo session, New York session, Sydney session. Okay? And these sessions overlap each other sometimes, okay? So like we see here is London and New York sessions. These sessions right here have the most amount of volume, especially the London and the New York overlap. Why is that? It's because it's America. America, like we talked about earlier in the video, is the number one country. They're the main people. Okay, they're the main people that control the market. So New York time is our time, is America's time. So that's why there's the most volume, because there's the most people trading during that time. Okay, so these sessions, London and New York sessions, are the only sessions you should trade. And yeah, so that's the main point, because it has the most volume, it has the most people. You can see stuff, it's more clear. And Tokyo session and Sydney session, they're pretty much the same thing. They're both nighttime shifts. No one trades in the night because no one's awake in the night. And people in Tokyo, Cindy, there's not as much traders, so there's not as much volume, okay, because it's different. America's number one, so there's not as much people there trading that in here in America. So New York and London session are the main things, okay, main sessions, main time zones. Okay, let's talk about the news. Why does the news work, or how does it work? Okay, so the news, if you do your research, if you really dive into the market, you'll realize market moves up, and then 1 minute later, good news comes out, and then market moves down, and then 1 minute later, bad news comes out. So people think news makes the market. News does not make the market. News makes an excuse for the market, but does not define where the market goes. The funds use it, like I was saying, the funds use news as an excuse for their action, or they use it to set you up. So they'll bring out great news that should push the market way high, but for some reason market starts going up, and then boom, big bearish candle, and people start selling, and the market goes down instead of going up. But you don't get it. Why? When there was good news that came out, it was a setup to make you buy so they can sell to you. Okay? So news is an excuse or a setup. Usually after a move happens, that's when news comes out. Okay? News is just an excuse. It doesn't define the market. Okay? So that's another big point. So these points, I would write these down. They're very important. This is the rules the AI has to follow. Okay, this is really, really important. If you master these, you're set. You know the market. You'll be making good money. Okay. So now we can talk about what commonly happens in every hour of the market. So every hour of the market, price commonly does the same thing day after day, but does it in different situations, does it in different ways, but it's the same concept. Okay. So usually during a 6 to 9 a.m., there's liquidity grabs, fake moves, or a setup for 9:30 a.m. for that New York session. Usually price does some moves up, sweeps liquidity, gets people to buy, and then they sell to them, and they make fake moves. And then usually when it starts coming closer around 9:30 a.m., they start setting up for the New York session. So they start making a new trend to go up if they're going to go up in New York. And then when New York hits, it's too late. It's already up. It's going even higher. So that's why I always want to hop on the market a little bit earlier, because sometimes they set up before it opens, okay? And then people buy too late, and then the price goes down because they set it up at 8:30, at 9, you know? So, okay, now what happens at 9 to 10 a.m.? Okay, 9 to 10 a.m. This is right after the setup. So setup happens. Usually big move, the real direction starts, it goes up, okay? Big volume, there's a lot of volume that goes on at this time, okay? And now, so what happens at 10 to 11? So sometimes trend confirms or reverses. So the price sometimes keeps going up, or it starts to reverse, and setups get formed, okay? So they start making more setups for later, for the last moves, okay? So 11 to 12 is lunchtime, so it slows down. Okay, yeah, so it starts making setups again. Same thing, it's pretty much the same thing as 10 to 11, but it's slower volume and it's still setting up for a reversal. So yeah, just either continuation or setting up for that reversal, whatever price did, and then 9 to 10. Okay, so what happens to 12 to 1 now? 12 to 1 is, so I guess 11 to 12 isn't really lunch hour, but it slows down, okay? Still, it continues the setup, or it continues going up, whichever way it was going. A continuation, or, just a continuation. So actually 12 to 1 is where the dead zone is, where there's low volume. Avoid trading here because price is going to consolidate most likely. It's not going to really make any big moves. And if it does make a big move, it'll be the last move, and then it'll continue going the other way. It's just don't trade during this time. There's not a lot of volume going on, and it's lunchtime, so no one's really trading at this time. Okay, so 1 and 2. What happens at 1 to 2 p.m.? Okay, volume returns, new setups form. So the new setup forms. There's usually a continuation of that setup they made, or continuation of the uptrend. So now 2 to 3 p.m. So they usually have a final trend move. But yeah, so they usually have like their final moves here. They play one last move before the market closes at 5. So now let's talk about what happens at 3 to 4 p.m. So 3 to 4 p.m. market slows down a lot. It's an end of day setups, consolidation. Again, they hit last move down, last move up, consolidating. You don't trade during this time ever. It's just the last moves and consolidation, and you don't know what price is gonna do. It's just gonna stay the same, okay, until market closes. That's what they do. And then 4 to 8 p.m. low volume, no clean moves. It's like there's no clean moves. You don't really know what price is gonna do after market reopened, okay? So yeah, 4 to 8 p.m. that happens, and then yeah, that's pretty much it. And then though the rest of the time I'm not even gonna put, because you shouldn't even be trading during those times. You should be waiting for the morning, because during those times usually setups happen for the next day, and fake moves happen, and it's not a good time to trade. I'm not even gonna put it in there because I don't recommend ever even looking into trading during the nighttime. It's just not something you do. You wait for the next morning. That's when that setup's gonna happen. That's when you're gonna actually know where price is gonna go. But here it's just setting up. It's continuing or it's reversing. You know, it's stuff like that. But anyways, so main point number 4 is learn to lose before you win. So this is a really big thing for day traders, is you need to learn to lose before you win. So say you win, for example, 10K, and you had 10 wins to get up to 10K, and now you have one loss, okay? But during that one loss, you end up losing all that 10K you made over those 10 trades, all that hard work, over just one loss. It's because you don't know how to lose. When price reverses, and you see that it's reversing, you keep moving your stop loss lower and lower because you're like, no, it's going to reverse. I know what I'm doing. No, sell it. It's better to sell it. And then if it does end up reversing, then buying again. Instead of not selling and having a risk of price to just keep on going lower and lower until you lose all your money. So learn to lose. You have to become a really good loser before you win. You need to learn to lose. Because if you keep on winning but have one loss and you lose everything, then there's no point. You need to learn to lose before you win. Learning to lose is very, very important. You got to know when to pull out. If you're down and you know price is going to keep reversing, you know in your head that it's probably not going to keep going. It's not going to keep going up. Sell it and buy back later if it does go back up. Okay? It's better to sell and buy later instead of losing all your money. So learn to lose before you win. And yeah, so that's the end of this video, the end of the session. So put in the comments what you learned. So a main point that you learned, something that's really effective, that really helped you out, okay? I want to hear about it. And yeah, so I hope you liked this lesson today. So tomorrow there's going to be another lesson. So yeah, I hope you liked it. Hope you learned something. And I'll see you guys tomorrow.